Bloomberg Audio Studios. Podcasts, radio, news. This is the Bloomberg Surveillance Podcast. Catch us live weekdays at 7 a.m. Eastern on Apple CarPlay or Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Stuart Kaiser joins us. He's head of U.S. equity trading strategy at Citi Global Markets. Stuart, what do you hear on your desk? What are your traders telling you? What are your clients telling you about what was at its trough about a 10% pullback in the market? A healthy step in an otherwise okay market, or something different?
Well, I think most PMs would rather not have that type of healthy step. But yes, I think, look, position de-risking, I think, is the discussion point, around Wall Street over the course of the last month or so. It does seem like that's later innings. Clearly there were policy and uncertainty things that triggered that. But the big pullback, I think, had much more to do about de-risking than it had to do with anything sort of on the data side necessarily. And
one can say that, boy, you insert any kind of uncertainty into a market that was as richly valued as we were at its peak, then a pullback should not be that surprising. Do we have more to go, do you think?
I mean, look, I agree with you 100%. I think coming into the year, you would have said, yeah, fundamentals underlying the market pretty solid, but risk reward around those fundamentals pretty poor. So having, a pullback of that nature, probably not surprising. Is there more to come? I mean, I think if you believe that a lot of this was driven by policy out of Washington and the key administrators down there are telling you basically to hedge and that there is more to come and that they're willing to tolerate some short-term pain for these longer-term structural reforms, then yeah, it does feel like there's potentially more behind this. Obviously, we've gotten a couple days of calm here, which is welcome, but it's hard to think that the headlines that have driven this are finished.
Within your vast experience, which goes back to the McKinley presidency, Stuart Kaiser, if you have a drawdown like this, do you see a snapback like in 1987, or is it a more protracted recovery?
It's a good question, Tom. I think a lot of people are citing the late 2018 period where you kind of had a drawdown, then you had a couple weeks of a bit of rally and stability, and then in December of 2018 we sold off again. So that would be your bear case, I think, or your bad outcome, because back then you had a growth scare and you had concerns about a policy error from the Fed. If you just swapped out Fed for White House, you'd be kind of a similar situation right now.
This is brilliant, because then Ben Laidler, when he was at HSBC, called the bottom of the market Christmas Eve of 2018. How do you know when to step in?
It's a great question. I think the early stages of when to step in, I think in this case, were going to be driven by price action because it was more about positioning. If you were being very positive, I think you would have said last Tuesday was the day to step in because you had tech stocks up in a down S&P tape. Bigger picture, though, I think you need to get through the budget and tax negotiations over the course of the next 2 or 3 weeks to really be on a more solid footing.
Paul, the thing I miss in here, you remember Stuart Kaiser in season 2, episode 4 of Industry.
Exactly.
Stuart Kaiser was yelling at the troops in industry, we need catharsis. We need catharsis.
Where is it? Yeah, I'm not sure we've seen it. Stuart, I'm looking at the earnings outlook for the S&P 500. It's kind of like 9, 10, 11% kind of earnings growth for the next couple of years. Are you guys comfortable with that, or is there a risk to that, do you think?
Our Scott Cronin on our equity strategy side does see some risk over the next few weeks of some downward revisions going into earnings season. I would say this: if corporate America, given all the uncertainty and everything that's happened over the last 3 weeks, comes out and defends numbers, that's going to read very, very positive. But particularly the parts of the market that have a little bit more of a China supply chain, Scott and team do see some downward pressure on numbers there. So we would expect to see estimates come a bit lower. To your point, very solid growth and very little negative revisions to begin the year. So I think, 1Q earnings is going to be interesting. If corporate America steps in and defends, then that's very positive. If they kind of kitchen sink this, just to get any bad news out there, then the market's clearly going to be under a little pressure during earnings season.
I knew Scott Cronin when he had an honest job selling my research on the West Coast.
Exactly. It was like a real job.
Exactly. So, Stuart, are you finding your clients are kind of going, they'd love to buy the Mag 7 or the tech stocks on a sell-off, or are they rotating into financials or industrials or something that may be a little bit more safer, just from a valuation perspective?
Well, I think in terms of like the cherry picking or the bottom picking, the focus has been more on tech, just because that's the stuff that's sold off the most. Big picture, do you want to broaden out this market? Yes. Are you going to do that at a time when U.S. economic growth looks a little wobbly? Perhaps not. So I would say the bottom picking or the buying the dip we've seen has been much more in the tech growth and momentum stocks that have sold off the most, because that's where the valuation is rebased. If you liked, Tesla down 25%, you probably love it down 50. So I think people are sort of focused on that part of the market right now for the buy the dip mentality.
How do you fold in economics now? Like if I've got nominal GDP coming in, if I got real GDP coming in, that affects the Stuart Kaiser world, doesn't it?
100%. And I would say the risks on that side to us are all on the labor side of the economy. I think.
Okay, so where do you go on a sector basis? I'm running out of time, Stuart, and I think people want to know, how do you shift your sector trading analysis given that diminished GDP?
Yeah, look, if you're slowing the economy, then you want to be not in the consumer-facing parts of the market, in our view. So I think if you're China exposed or consumer exposed, which a lot of retailing is, that's the part of the market you want to be the most careful about, without a doubt. I think U.S. consumer has been the white knight of the global economy for years. If we start to see cracks there, which we are seeing on the confidence side of things, then that to me is the part you want to be the most careful with.
Stuart Kaiser, thank you so much. Greatly appreciate it. With Citigroup.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
We're going to go to Dubai right now. Joumanna Bercetche joins us now with a great overview of a view from 60,000 feet on all going on in Gaza, in Yemen, and of course the effect upon her Middle East. Joumanna, thank you so much in your evening for spending time with us. I believe in a 3-day period, I have attacks on Yemen, attacks on Gaza. How do the major Middle Eastern powers adapt? I mean, what does Saudi Arabia do and others?
Yeah, and you're also missing attacks on Lebanon and Syria as well, in addition to skirmishes on the Syrian border. So yes, there's been plenty going on in the Middle East in the last few days, a real escalation of things since where we were in January 19, which is when that ceasefire in Gaza kicked in, phase 1 of the ceasefire. I think it's safe to say at this point that the ceasefire is pretty much dead. There is no evident commitment, either from the part of the Israelis or from Hamas at this point, to want to continue with the ceasefire in its current format. And that came to light in the last 24 hours. The death toll obviously climbing. The latest figures from Gaza Health Ministry showing that more than 400 people were killed in yesterday's airstrikes. But you did ask about the broader Arab region. And the thing is, let me also just rewind it back to not just discussions that were taking place vis-a-vis how you move from phase 1 of ceasefire to phase 2, but also those broader discussions amongst the Arab League around the eventual reconstruction of Gaza. And that was in response, you may recall, to Trump's Riviera proposal, where the US administration essentially said to Arab states, if you want to be involved in Gaza, give us your counter proposal. And now it appears to be the case that this is such a remote possibility. You can't even think about reconstructing when airstrikes are still a daily feature of the lives of Palestinians, and where Israeli hostages are still being held in captivity by Hamas. So we really seem to have gone back to square zero again with the events of the last 24 hours.
And Joumanna, during the ceasefire, the exchange of hostages was taking place maybe at a slower pace than people would have liked. What happened from the perspective of Hamas to refuse to release the remaining hostages? What changed?
Yeah, so the initial ceasefire was composed of 3 phases. The first phase entailed the release of around 30 hostages in exchange for Palestinian prisoners, and that part of the ceasefire actually expired a couple of weeks ago, so exactly 17 days ago. One of the other preconditions was for the IDF to withdraw away from populated areas in the Gaza Strip, but to maintain a buffer zone. And there was also an understanding that they would start within the middle of phase 1 talks around progress to phase 2, where Hamas would release the rest of the hostages. It is estimated that 60 hostages are still held with Hamas, about half of them still alive, and that Israel would fully retreat from the Gaza Strip. Now, The U.S. Said that the discussions between the two sides were not yielding any fruit, so they put forward this bridging proposal, which would allow for an extension of phase one while they worked out the details of phase two. But the sticking point is that Israel wanted the full demilitarization and to completely decapitate Hamas's capabilities in the Gaza Strip. They didn't want to allow that to happen. So they held back on releasing the hostages.
For our audience, particularly waking up in America, good morning on your commute across America this morning. The fundamental issue, whether someone's vision is back to 1967 or dare I say back to 1948, is a completely intractable situation. And the heart of the matter is, I guess, I'm speaking as an amateur, you're the pro, where do the Palestinians go? Where would the Middle East like the Palestinians to go?
Well, the Middle East would like the Palestinians to live and thrive within ultimately what would be defined as a Palestinian state. So remember, the position from all of the Arab states is that there needs to be a credible path towards a two-state solution. The last carrot in the region is Saudi Arabia, and we've talked about this in the past, about before October 7, there were talks going on behind the scenes about a potential normalization deal between Saudi Arabia and Israel. But given the events of the last 18 months, Saudi Arabia have held back now and said, we're not going to sign on anything unless there is an actual credible plan to get to that two-state solution. And even in the response of the Arab community after Trump's Riviera proposal, which I think was quite telling in itself, in that they reconfirmed that there should be no forced displacements of Palestinians out of the Palestinian territory under no conditions. There has to be a credible reconstruction plan. But then many more moderate Arab states in the region will say they also don't want to see Hamas in a governing position in the Gaza Strip as well. So there also is a matter of governance in order for the money and the reconstruction appetite to come in.
Joumanna, thank you so much for the time today. Joumanna Bercetche leading all of our Middle Eastern coverage from Dubai.
You're listening to the Bloomberg Surveillance Podcast. Catch us live weekday afternoons from 7 to 10 a.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Cam Harvey joins us, professor of finance at the Hugo School of Business at Duke University. Cam, one of the things we're noticing here in this world of the last, couple of months and the uncertainty that's been injected into this marketplace is people still flock to gold here as, I guess, a safe haven. $3,037 per ounce here. What do you make of our friends buying gold here?
Yeah, so this is the subject of my research. And it's kind of interesting that there are two factors. There's kind of a medium-term factor and a short-term factor. So the short-term is the increase in uncertainty. The medium-term factor was what happened after Russia invaded Ukraine. And essentially, the US dollar was weaponized. So with the sanctions, it made it very difficult for Russia to do business because the numeraire currency in the world is the US dollar. And China took notice of this. So China strategically wants to de-risk, meaning that they need their own currency to be credible. They cannot continue to rely, as they have been, on the US dollar. So to ensure or to build the credibility of the Chinese currency, they've been buying gold. And given that there's a limited production of gold every year, like last year was 3,300 metric tons, that increase in demand has been driving the gold price up. So that is factor number one. And factor number two is unraveling today, given the uncertainty that has been induced by this new administration, that people are looking for a safe haven. And there is a strong perception that gold is a safe haven investment.
Can you have normal stock markets, a bid and an ask, with the tumult that we see right now?
Yeah, so it's very interesting. So we are in like a minor drawdown, but my research looks at major drawdowns historically and identify 9 major drawdowns. So these are drawdowns where the market goes down by more than 25% from peak to trough. And it's interesting that in 7 of the 9 negative episodes historically, that gold actually has a positive return. In the other 2, gold has a small negative return. So think about that the market's down 40%, gold's down 2%. That's pretty good. So even in the times where it doesn't produce like a positive return, it does far better. So historically, it has been a diversifier. However, and this is really important, and most people don't fully appreciate the following point. Gold is volatile. So gold is as volatile as the S&P 500. So that means it can have very large drawdowns also. It means that it's not a safe haven for sure. It is historically a safe haven, but it can have very sharp drawdowns.
Should gold be a part of the average person's portfolio? We think about the 60-40 portfolio, and now people talk about alternatives need to be a meaningful percentage of that. Where's gold in an average portfolio, do you think?
Yeah, so I get this question a lot. So to have a diversified portfolio, you should have more than stocks and bonds. It's kind of obvious. And if you look at major institutional investors, they almost always have what they call kind of a bucket that protects them from the downside. And that kind of downside protect bucket often includes gold, but it's not just gold. So it's often a diversified set of commodities. It will include treasuries that are inflation protected. That's important. And perhaps some other real assets. So yes, I think that the average investor, just like the institutional investor, should have a diversified portfolio, and gold certainly does play a role in a diversified portfolio.
Professor Harvey with us, Campbell Harvey with us from Duke University this morning. We welcome all of you on your commute. We welcome all of you. Bracketology, and what is it, 11 miles between UNC and Duke this morning?
15501.
On YouTube, subscribe to Bloomberg Podcast. It's our new digital experiment. We're humbled by the international reach of this. I featured the Mumbai Financial District today in their evening listening as well. But with Cam Harvey, he's looking at gold here. We should point out as we speak, gold at a number none of us have ever seen before. It's so I can't even find it on the screen. It's so lofty. Are you ready? $3,039. It's up a pop and $33 this morning.
Cam, I guess really over the last couple of months, what's been the key issue driving these markets has been just the talks of tariffs. When you get in front of your students down at Duke, how do you frame out tariffs as an economic policy?
So the first thing to realize is that the U.S. exposure to kind of trade is small. And what I do in my class is like a quiz question. If we look at trade exposure as exports plus imports divided by GDP, how does the U.S. rank in terms of 179 countries in the world? And it turns out that U.S. ranks 177. So it's got very low trade exposure. So think of imports as being only 14% of GDP. So it turns out that other countries have much more serious exposure to the U.S. policy than the U.S. So the issue, I think, is not just the tariffs, but the uncertainty about how the tariffs are going to be applied. So if we knew what the policy was, like 25% across the board, we could actually figure out the hit in inflation and the hit in GDP. And it is a hit. It is a negative, but it's not a large negative. And I think a lot of the problems are the tariffs on, tariffs off, and different numbers being thrown out. We just don't know. That creates uncertainty. Investors don't like uncertainty.
Cam, you've lived in the heart of the collapse of the American textile industry. I mean, in the Carolinas, maybe I'd also put it in the furniture industry as well. What do you say to the fancy elites at Duke University about all those jobs we lost to Asia?
Yeah, so this is globalization. And I think that a number of mistakes were made in the push for globalization. And now we're reversing some of those mistakes. So we have let other countries hold us hostage to critical minerals. So that's the sort of thing that you should not offshore. So we will be reshoring, repatriating certain key industries that we cannot afford to let adversaries have influence over us. So I think that the sort of laissez-faire, blind sort of push to globalization didn't take one critical thing into account that we think about all the time in business, and that is risk management. So a lot of this reshoring is going to be expensive. Right. So it means that to produce it in the US is going to be more expensive. And what that will do in the medium term is be pressure on inflation, but that extra expense is an insurance premium that we should be willing to pay to have these things produced within the US.
What does Mark Carney need to do for your Canada, Professor Harvey?
Well, obviously, Carney is highly experienced in terms of both business experience and central banking experience. My country, Canada, has effectively been in a recession for the last 3 years. And I say that not because of the headline GDP numbers, but if you calculate, and this is what people should do, calculate GDP on a per capita basis. And given the growth in population in Canada, we've had negative GDP growth. So we need somebody to come in and change the course because nobody wants to be in recession for years.
So how serious and how much risk do the U.S. tariffs as currently talked about, what's the impact on Canada? How big of an impact could that be on Canada? How concerned is Canada?
Yeah, so again, it's interesting. I said that the U.S. has very little trade exposure overall, with imports at 14% of GDP. I also did that calculation where I took the area, so Canada, Mexico, and the U.S. put together, and it's amazingly self-sufficient. And I think that a better idea for the U.S. would be to kind of strengthen the bond between Mexico and Canada and truly be sort of an area that is resilient to fluctuations that might happen across the world. For some reason, that is not the policy. And that's unfortunate. So that's going to cost, to some extent, U.S. growth and Canadian growth. But I do think that many Americans are not aware of the amount of business that the U.S. does with Canada. And it will be painful if those tariffs are imposed.
Cam Harvey, thank you so much with Duke University and those comments on his Canada this morning.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.
Right now, Skylar Montgomery Connick with us with Barclays. Skylar, is foreign exchange useful now in gleaning tariff dynamics? Like when you look at loonie or you look at peso, Max, can you learn something there?
I think there's very, very little to learn in FX markets. I think there's very little priced in terms of tariff premium, and there are a couple ways you can see that. So one is we have a fair value model for euro dollar. We're pretty much at fair value on euro dollar, and you could say tariff premium is leaking into rates market, and so it's reflected in some way through fair value through that mechanism. But I still think there's very little priced, and I'll actually say I think where the most concern about tariffs feeding to growth is prices in the U.S.
So I would think I'd see more strength in the U.S. dollar given all this uncertainty, but the Bloomberg Dollar Index is kind of down like 4.2% from that kind of early January peak. What am I missing?
I think this is the issue, is that the market doesn't really believe tariffs are coming in the full force that Trump has threatened. And that's totally reasonable to assume, but we're pricing very little in general. But tariff risk and the uncertainty has creeped into the U.S. data. So if you look at U.S. economic surprises, they've turned over, they're negative. That's largely because of the soft data. And that soft data is reflective of the fact that there's uncertainty, that tariffs are a downtrend on growth in the U.S., and that is showing up in the dollar in a weaker dollar. But because we start from such low sentiment elsewhere, so Europe, for example, confidence been low for a while, it's harder to have that uncertainty reflected there. So I think it's priced much more in the U.S. than it is elsewhere.
We were trying to get the dollar to parity for Tom Keene and all his European travels. That did not happen. We're sitting here at euro 1.09. How high can a euro go, do you think?
I think you're very limited in how hard you can go from here. I think part of that is fiscal is definitely a game changer, particularly from Germany. But it's largely been priced, right? As a very quick rule, you can get 25 to 30 basis points on yields from a 1% GDP fiscal expansion. We're up 40 to 50 basis points in European yields, and that's really reflected in Eurodollar as well.
Within traditional analysis, do we get Canadian strength or Mexican peso strength, MEX strength, that impinges their trade dynamics? Or is that like micro analysis where it doesn't play in anymore?
I think tariffs overwhelmingly, because Canada and Mexico primarily trade with the U.S., the tariff overwhelms any kind of currency impact you have, right? Because it very much makes Canadian imports less appealing to U.S.
So where's your trade this morning? What's your single best idea on a currency pair? I need something esoteric.
Esoteric. Okay. I think something that I quite like is the yen. I like the pound as well. But the yen in particular, there's a number of cross currents that go quite well for it right now.
Let's mention one. There's no one. It's only 42 people listening. Good morning. Excuse me, 44 people. Good morning. 99.1 FM in Washington. Yen what?
Yen, I think, versus Swiss or versus the euro.
So why? I mean, what is going on with Japan? We didn't talk about Japan forever.
Yes.
Like longer than you've been around. We'd never talked about Japan. Now, I got Warren Buffett talking about it. I got you people telling me about the yen and all this kind of stuff. What's going on in Japan from your perspective?
So it's both domestic and international. On the domestic front, you have growth that will come in above potential this year. And actually, it has one of the highest growth rates we anticipate in G10. At the same time, you're getting more inflationary pressures. So that means you're going to have a hawkish Bank of Japan. We see them hiking to 125. At the same time, it's less exposed to tariffs and will also benefit from the risk aversion associated with the uncertainty around tariffs and other U.S. policies.
Skylar, thank you so much for joining us this morning. Skylar Montgomery, Conor with Barclays.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Let's go to the newspapers right now. Lisa Mateo with some chestnuts this morning.
Oh, Paul, you're not going to like this story, but okay, bear with me, okay? The experts are saying when it comes to setting up your brackets, do not pick Duke to win. Okay, the reason why, okay, this is what's in the Wall Street Journal, and the two writers of the article are actually Duke graduates, so just want to put that out there. They said you should bet against them. They say undervalued teams, that's who you should pick instead. Like they say, think like a value investor, right? You bet on the best, least popular team against the most popular team. Pick teams like, here you go, number 1 seed, Houston, another number 1 seed. Also value in number 2 seed, Tennessee, and number 3 seed, Texas Tech.
Really?
So that's what they're going with. So I don't know what's on your bracket.
I don't. Does anybody know? I mean, like in BRKT Go, there's like 4 people that get it. It's sort of like a Monte Carlo random kind of thing, isn't it?
Well, you just
4
pencil
people
in.
get
It's
it.
what I've done since 1989. You pencil in Duke to win it all, and you work back from there. And that's how you do your brackets.
The strategy.
It works 5 times for me. It's worked 5 times.
I haven't revisited mine this morning,
But you never know. I mean, who won last year? It was a repeat. No, Connecticut.
Not me.
UConn.
Scarlet Fu killed it.
Oh, there you go.
Killed it. What do you got next?
Never know what can happen. Okay, so I'm going to stick with this March Madness theme, okay? I didn't even realize this, but Warren Buffett's Berkshire Hathaway has this big bracket competition where the winner can get $1 million. I didn't realize this.
Setting up right now.
The problem is that no one's won it, but he's trying for nearly a decade to give away this big prize. So the Wall Street Journal says that he wants to improve the odds, right? Because he says he's getting older and he wants to see a winner when he's still chairman. So he's making it easier to win, because in the past you had to, be like had to call the first round perfectly. But now he's changing it up a little bit. Okay, so this year it can go to someone who correctly picks the winners of at least 30 of the 32 first round games. So you kind of have a better chance. He's an odds guy, so the odds are a little bit better. The person with the most correct games can win. You have tiebreakers too. The runner-up can get $100,000.
So this is like Damien Sassar territory.
Yeah, he's all
This is like something Damien would do.
Yep, exactly. He's a player.
But it's a big, big, big prize. So I didn't realize it's been doing this for years.
I don't get it. Next
one. Okay, sticking with gambling, because you see the theme of today.
Okay, it's very good.
Yes, here we go. Business Insider saying FanDuel launching a new show about gambling addiction. It's actually called The Comeback with Craig Carton. He's a recovering gambling addict. Airs on YouTube channel. It's streaming network FanDuel TV Extra. Didn't even know they had that. But they're going to be talking about their struggles with sports betting. So the company is saying it kind of adds to this mission of promoting safe gambling, with all the news and the headlines for it. But this is something.
Yeah, but Paul, you're closer to this than I am. Don't they just have to shut down the addicts? That's what you do. They see in their computers that, young Mateo's on the couch addicted to this, and they shut them down.
I don't know how that works. But it just now, all I know is I was having breakfast this past Saturday at a local luncheonette, and there was a table of maybe 4 16-year-old boys, and they were talking gambling, what bets they were placing. That was disturbing to me.
Yeah.
And I don't know. And they were speaking as if they were pros. Taking the over here, the under here, the points, the spreads. I'm buying these odds. I'm doing,
Yeah.
I don't know.
Yeah, my daughter's saying they're doing like during class.
Yeah.
I'm like, what's going on in this place? I don't know. So
it's a thing.
It's another level. Yeah.
It's a thing. I don't know how many states have it. 38 states or something, like 28 states. So I'll have to see.
Update. Lisa Mateo, the newspapers. Thank you so much. Greatly appreciate that.
This is the Bloomberg Surveillance Podcast. Available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 7 to 10 a.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.